Very good afternoon and very warm welcome to all the participants. Our earning update for the second quarter and half-yearly ended September 2018 has already been circulated, and I hope that all of you would have received the same. As you know, the first quarter of the current fiscal has started on an optimistic note with the estimates of higher economic growth, the stability, the great uptake, resolution of the major NPAs, and consequently improved earnings in the banking industry. However, the events like hardening of the yields, the rupee depreciation, and rising crude prices, coupled with this widening the current account deficit, and then the ILFS episode followed by the stock market volatility, and also the squeeze on the non-banking financial sector begin to haunt the market once again, and the resolution of NPAs through the NCLT is also taking a longer, and the liquidation of the assets may entail larger haircuts than the earlier envisaged for the industry as a whole. So there are also the forthcoming elections both in the state and the center, which also cause temporary disruptions. So resultant being again that industry is looking at a muted credit growth. But coming to our bank, that despite the prevailing and the emerging challenges, we have been able to deliver a robust credit growth of 24% on YO basis with a broad-based contribution from all the geographies that we operate in. This was the result of our focused approach, as we have now put in place an organization structure which is fully aligned with our business goals and objectives. We started a new organization structure with effect from July 2018 with the 13 verticals, so as to have a special focus on each line of the business. So a well-defined medium-term business plan supported with thoroughly thought-out strategies drawn out in consultation with the Deloitte, and going with our core strengths. So our focus on the expansion of the credit in retail and SME sectors, especially within the state, which is having a reasonably high absorption capacity, has strengthened our core J&K state business, besides this enabling us to deliver the profitable growth in an otherwise very challenging and a fragile environment. In the rest of the India, the business, our incremental credit growth is coming from lending to the low-risk top-rated corporates, and of late, the retail portfolio in the rest of India has also shown some improvements, especially in the housing and the higher good-rated SME segments. Notably, the bank has now reported 6 consecutive quarters of the profitability after recovery from a loss of 632 crores in the financial year ended March 2017. And the net profit of rupees 146 crores booked for the half year of the current fiscal is 44% higher than the corresponding period of the previous year. So the business turnover of the bank from the J&K state has crossed 1 lakh crore milestone on the back of robust credit growth and in line with the earlier guidance. And the share from the J&K state has also improved to 53% of the total advance of the bank. So the robust credit and the NPA management has resulted in tapering of the slippages, where the momentum of recovery is maintained. And during the second quarter, against a slippage of 250 crores, recovery of around 426 crores were effected, resulting in the improvement of the gross NPA ratio coming down to 9% and net NPA ratio coming down to 3.9%, 91% rather, from 10.87 and 4.76 a year ago. So we continue to maintain our coverage ratio in line with the guidance given to the market in the range of 65 to 70%. The silver lining is that, and about which there were concerns, and till, we will reach to the December 2019, there will be concern in respect of portfolio. But the good news is that our J&K state rehabilitated portfolio has been behaving very well, and with only 0.8% slippages in the 9 months period post the end of the moratorium period. And this is to the great extent, I'm sure, dispelled the market apprehensions on the J&K state restructured portfolio of rupees 4,300 crores. But going forward, we are focusing on this particular portfolio and monitoring it very closely. And let me remind you that we have been reversing the interest that we have booked on the J&K state restructured portfolio during the moratorium period in a staggered manner as per the RBI directions over the 5 quarters, starting from the quarter ended March 2018, which was to the tune of around 900 crores. And during this half year, we have to reverse around 130 crores from the interest income on this account. With the satisfactory performance, they exhibited in the repayments of this restructured portfolio, we anticipate that we may be required to make the comparatively lower reversals during the next 2 quarters of the current fiscal. So this reversal of interest income has resulted in the understatement of some of the performance parameters of the bank for the half year, like YOY growth in the interest income by 500 basis points, and the yield on advances around 42 basis points, and NIM is around 30%. So the provisioning requirement for the fresh slippages during the second quarter and half year was only 40 crores and around 130 crores respectively. But the provisions of rupees 90 crores for Q2 and 240 crores for the half year was consumed by the aging of the NPAs, impacting the bottom line to that extent, like we have to make the provisions to the extent of 242 crores for the half year, and for the quarter, in the first quarter, we have to make a provision of 90 crores on account of this aging of the NPAs. But I think going forward, its impact will not be so large. JK Bank, in addition to registering a positive bottom line, has recorded also the improvement in the number of financial parameters, like as you have gone through the investor update, you have noticed that YOY credit growth in excess of 20%, CASA ratio of around 50%, NIMs of around 3.72%, and the cost of the deposits, the cost of deposits is around 4.87, and one of the things which have always been taken into consideration to maintain the NIMs in line with the guidance given to market was to the better liability management. We are still not focusing on the high cost depositors, which was creating the problems in the balance sheet. So the moderation in the gross NPA ratio and the net performing ratio and the NPA coverage ratio of around 70%, and capital adequacy ratio around 12.02%. But the rating downgrade of ILFS to default category in one particular account, which was to the extent of 70 crores, has also impacted and the provisioning, but especially the capital adequacy ratio by around 20 basis points. And credit cost for the quarter has come down to sub-1. It will be around 0.8%. Cost income ratio, yes, it is definitely high, but the contributing variables like the reversal of the interest income, a large portfolio of the non-earning assets, additional cost on account of the provisioning of the gratuity and wage revision, and principal waivers, which are temporary in nature. And with the resolution of these issues, I am sure that we anticipate that the ratio will return to a comfort zone of 50% over the next couple of the years. Let me walk you through some of the developments and the work on hand that are underway, and they are going to have the impact on the working of the bank. On the capital front, the raising of 1,000 crores in the Q1 and the resulting improvement in the capital adequacy ratio has eased the capital constraint, and the internal accruals and the further augmentation of the capital to realization from the PNB MetLife sale shall take care of the regulatory and the growth capital requirements, because whatever the profitably which we have declared during up to September, the net profit will be added to the on account of computation of the capital only at the end of the financial year as per the RBI requirements. But we have the headroom and the board approvals for raising the Tier 2 capital as well. And in case we need to raise the Tier 1 capital, we have the capital of the couple of the options. We may not like to go for the QIP at this particular point of time because we don't see the valuations are so attractive, keeping in with the overall depressed market conditions and the uncertainty in the market. But we have the support from the state government. We have the couple of the cushions, and I'm sure the kind of the growth which we envisage for the current fiscal, we are comfortable in terms of capital adequacy ratio, and also, raising the additional capital without resorting to the QIP for time being to take care of the capital requirements for the growth which we have envisaged for the current fiscal. So, management of the NPAs and the restructured portfolio shall remain the focus area, commanding the constant monitoring and the follow-up. And the restructured portfolio outside the J&K state is, the almost entirely downgraded as on date. And as per the J&K state restructured portfolio concerned, we are monitoring, as I mentioned earlier, we are monitoring it expeditiously and very closely, and the record of the servicing of the installments, principal as well as interest in the portfolio. Since the end of the moratorium, which is from January 2018, are satisfactory. So during the 9 months period, against a scheduled repayment of around rupees 477 crores in the J&K state restructured portfolio, we have received around 462 crores. So we shall continue to focus on the recoveries, almost all the possible routes, and the resolution of 2,500 crores of the NPAs pending in the NCLT shall be an encouraging stimulus. Keeping in view, we have created sufficient provisioning against these the accounts which have been referred to the NCLT. We are very comfortable in terms of the resolution of these accounts through the various routes which will be available in the market. So the robust and quality credit growths, satisfactory repayments in the restructured portfolio, and the release of provision on account of the recoveries of the bad loans shall be the underpinning factors for the income growth. And as you know that we are expanding aggressively in the unbanked areas of the J&K state, not only by opening the traditional business units, but also the very innovative delivery channels like ultra-small branches to facilitate the banking at the doorsteps across the geography of the J&K state. A couple of days back, our 34 branches in the Ladakh, ultra-small branches were inaugurated by the Honorable Governor of the J&K state, which has connected 111 villages in the Ladakh region. So we started from a difficult terrain, and I'm sure that the kind of the pilot which we have run there successfully, we would like to roll out in the entire J&K state so as to map the entire J&K state where we feel is a huge potential in terms of both lending and as well as mobilizing the low-cost deposits. Simultaneously, we are also planning to optimize our presence in the rest of India by expanding in the territories where we feel that we can grow there, and we have a strong franchisee, and the kind of the business which we are doing in the J&K state, we can, on the basis of those experience, expand the business in those areas. So our next phase of growth will be driven by the credit penetration in the underbanked and underleveraged areas of the J&K state. And a major chunk of it will come from the greenfield projects, which we are focusing on promoting the entrepreneurship in the nooks and corners of the state by opening up the startup facilitation centers in all the 22 districts. So there is a lot of policy support for the startups at the state and the central government level, and we are seeing our role as an enabler in the ecosystem. And the state government is also keen in fast-tracking the completion of these, the infrastructure projects in the state by arranging the timely finance for the same. And we also see a lot of demand from the government spending on account of the infrastructure within the J&K state. We will be the major beneficiaries. A lot of ancillary demand will get created, resulting in the expansion of the credit. So on the growth front, we are on course for achieving our the envisaged business targets for the financial year 2018-19. We maintain our earlier guidance to the market for the financial year 2018 and 19, which is overall growth of 20%, J&K credit growth around 25 to 30%, deposit growth of around 20%, cost around 50%, and the gross NPA ratio will be sub 7, and net NPA ratio will be around 3.5. NPA recovery, we expect of having a recovery of around 2,000 crores during this particular financial year, and pertinent to mention that 950 crores have already been achieved during the first half year. We would like to maintain the PCR at the range of 70%, NIM around 3.5 to 3.75. Credit cost will be around sub 1. Cost income ratio will be around 58 to 60%, and return on assets will be 0.5, and return on net worth will be around 6%. So balance sheet size will be crossing around 1 lakh crore by the end of the current fiscal. And we acknowledge your support and trust, and we expect it to continue in the coming days as well. I'll be glad to have your questions. Thank you very much.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Participants are requested to use handset while asking a question. This is a reminder to all the participants in the conference. If you wish to ask a question, you may press star then 1 on your touchtone telephone. Thank you. We will take the first question from the line of Vaibhav Barjatia from HNI Investment. Please go ahead.
Yeah. Hello.
Hello.
Yeah. Hi, sir. Thanks for providing me this opportunity. Just two questions. One is, we have a standard restructured
Can you introduce yourself, please?
Yeah. I'm Vaibhav Barjatia from HNI Investment.
Okay.
And, we have standard restructured assets of around 4,000 crores, which is primarily in J&K. I just wanted to know what is the provisions that we held, that we have against these accounts?
We have the provisions to the range of 192 crores, which is around 8 to 10% of the total portfolio. Okay.
Got it. And secondly, what is our total exposure to IL&FS group, both holding company and all the subsidiaries together?
We have an exposure of 1,354 crores, precisely, yeah.
Okay. And both in the investments book and the loan book?
We have only a small amount on the investment side, otherwise largely on the credit side.
Okay, got it.
Yeah, I think the treasury route, we have an exposure of around 10 CR, yeah.
Okay. Yeah, I think that's it for now from my side. I will come back in the question queue. Thank you.
Thank you.
We will take the next question from the line of Jai Mundra from B&K Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, I wanted to know, sir, out of this 13,050 crores, if you can split that into, power or transportation entity, because that will help, understanding the color of the exposure.
No, let us be very clear. It is not 13,000 crores, it is 1,354 crores.
Yeah, sorry, 1350 crores.
Not 13,000.
Yeah, so my mistake, sir.
Kashmir is always in the news, so let's be clear, it is only 1,300, not 13,000, right?
Yeah, my mistake, sir. So if you can, kind of split that into how much is into power or road or transportation entity or holding company, and how much is into, operational SPV, which are, anyway doing very well.
So largely it is to the, the IL&FS Financial Services, it will be around, it will be around 850 crores to the J&K Bank, the IL&FS Financial Services. And rest is, like Tamil Nadu will be around, 100 crores. It is precisely 91 crores. And then MP border check post is around 85 crores. Then Chennai North Sea Tunnel is 169 crores. So the major thing which is on account of the IL&FS Financial Services Limited.
Okay. And sir, now because have we made any standard provision or any prudent provision, because the account looks shaky, So, but though it has not defaulted, so have we made any prudential provision against this exposure?
We are cautious, keeping in view, maybe, if we are expecting some kind of the haircut, and you are the best, the people who know it more closely, they are operating from the financial market. But what we feel at here at the headquarters, yes, we need to start making the provisions. We have made the enhanced provisioning levels in our books to take care of the haircuts which we expected from this particular account.
So have we started making the provisions, sir,
yes,
or we will be doing in third quarter?
We have started making the provisions.
Sir, any quantum if you would like to share?
No, keeping in view the expectation which is from the market, having a haircut of say 10 to 20%. So we have started making provisions accordingly.
Okay. So if I understand it correctly, then we have roughly around 200-250 odd crores provision as of now, as of 2Q?
No, in respect of this particular account.
Yes, sir. In this group exposure,
no,
1,350.
Started making the provisions right now. And I cannot specify the number right now. That will be not appropriate. But yes, we have taken the cognizance of the enhanced provisioning requirements in respect of these particular accounts. We have taken note of this.
Sure, sir. And just last one on this group, sir, because a lot of banks, they have shared that, the status as of now is this financial entity is possible into SMA 2. And maybe MP border is already NPA. So just wanted to check.
That is NPA. We have already downgraded the disclosure which we have given in the investor update. This MPA border of 85 crores is forming part of that. But all other, the outstanding which you are saying reported in SMA 2, in our case, it is SMA 1.
Okay. All other entities are SMA 1 as of now, right?
No, 4 are standard.
Okay.
They are servicing the interest. And up to September, they have, the service to the interest also.
Yeah, up to August, they have paid the interest as well as whatever.
Up to March, we don't anticipate any default on account of the ILFS, because the kind of the meetings which we had with the management, it is a small amount which they will take care up to the March in respect of our portfolio. So there are no concerns which will emerge in respect of our exposure to ILFS up to March. And we hope by March there will be clarity on the ILFS issue. Yeah.
Sure, sir. And just last one on this Chenani-Nishari tunnel project, that is working very fine, right? What is your sense, sir? Is this also in stress, or that is very well done?
No, it is working very well. If you come by road from Jammu to Srinagar, you will come to know that this tunnel, is doing very well. Is doing very well.
Yeah. Sure, sir. I'll come back in the queue. Thank you so much.
Thank you very much. Thanks a lot.
Thank you very much. Next question is from the line of Jatin K from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a decent set of results.
Thank you very much.
Sir, my first question would be, I wanted to know, based on our current growth plans, when do we need to raise capital now? Would it be next year?
I think so, yeah. We don't need the capital during this particular financial year. And in case that, the MetLife, the listing part is not through during this particular financial year, maybe we may need the capital in the last quarter. I'm not sure about the same, because when the kind of the half-year profits that will be added to the capital for the completion of capital at the end of this financial year should take care of the. But we have also the commitment from the state government as and when we require the capital, they will be supporting us in terms of the infusing the required capital in the present circumstances. Otherwise, we are comfortable in terms of the capital adequacy ratio. But for time being, we are not going for the QIP, which we went planning earlier.
Okay, sir. And sir, our ROE guidance for this year, if I heard correctly, was 0.5%.
Yeah, that's right.
So, when do we, based on our estimates of provisions and all, when do we expect our ROA to reach back to 1+ levels and all?
I would be a bit conservative on this thing. I would like to give this guidance in the next financial year rather this particular point of time. Let us see how the numbers will other than March, how the numbers will look like too. So that way, I would like to give the guidance for the next year rather than, projecting anything at this point of time. But I'm sure that the number which you are referring to, maybe will be in a position to achieve this number by 1920, comfortably. It should not be an issue. Because, the kind of the concerns which we had in the balance sheet, largely we have addressed it. Now, only the concern which is on account of the ILFS, I'm sure that it is a systematic importance for the country as a whole, and there will be some kind of the resolution which we are expecting very soon. But otherwise, very comfortable. There are no large concerns, and I'm sure that the kind of the potential and the leverage which have the balance sheet, we will be in a position to now leverage it fully once we are through with this kind of the problems which we have suffered for the last couple of years. Okay, great to know, sir. And sir, currently we are hearing a lot of issues in NBFC refinancing and all those things. So on ground, are you seeing anything on that sort, and is it going to benefit banks, or how is the situation? You can clarify, please. So far the NBFC part is concerned. In fact, we were, very conservative in terms of, expanding our loan book to the NBFCs for the last couple of the years, because we were also anticipating the trouble in this particular sector. Is not an issue as on date. We are very comfortable in terms of our portfolio in NBFCs. But we need to watch this sector more closely going forward. And so, we are not in any trouble, but are we seeing as in lower competition and better pricing because some of NBFC may have reduced lending and all those stuff? Well, it may not impact the J&K Bank because, in the J&K state, we do not have the largest presence of the NBFCs in the J&K state. It may be true in the rest of the India which are focusing in respect of the banks which are focusing on the retail lending, on the microfinancing lending. But so far the J&K state is concerned, here we do not have the much competition from the NBFC, and it does not also give us the opportunity in the J&K state to expand our share in the market because there's a limited exposure of the NBFCs in the J&K state. Okay, that's it from my side, sir. Thank you. Thank you, Ramesh. Thanks a lot.
The next question is from the line of Vinod Jairam from ENR Advisors. Please go ahead.
Yeah, hi, good evening, sir.
Good evening.
Yes, sir. Talking about the reversals, what is the total amount to be reversed and how much have we done in the first 3 quarters regarding the J&K state restructured portfolio?
No, of what is remaining up to the 31st March, because we have to, do it staggering over a period of 5 quarters. So what will be now left out will be now roughly 50 to 60 crores, not much.
Okay, and for the remaining quarters, you're saying it is only 50, 60 crores?
50 to 60 crores because it is net of recoveries. In case we are in a position to recover any amount on account of this restructured portfolio, so the provisioning has to be made net of recoveries. So on the basis of our, the healthy position on account of the recoveries in the restructured portfolio, the remaining, the requirement will be 50 to 60 crores only up to 31st March.
Okay, but on absolute numbers, how much was the reversal that was supposed to be made, sir?
No, it was around, it is not 900, it was 620 crores, sorry.
Yeah. Okay. Yeah. So 620 crores. So out of which, okay. So in terms of the scheduled repayment, you mentioned the 477 crores you have received in the 3 quarters. So on a quarterly basis, it becomes around 160 crores approximately.
We are also factoring the recoveries. So recoveries which we are expecting in the next couple of the quarters. So the net will be 50 to 60 crores only.
Okay, understood. So, sir, the scheduled repayment, if I look at the economics, so what is the term deposit exposure of this total J&K state portfolio, restructured portfolio, sir?
Term deposit?
Yeah, term loans.
Term loan. The term loan will be to the extent of around 1,300 crores.
Okay, so this 160 per quarter is towards that 1,300 crore term loan exposure.
That's right.
For the next 8 quarters, it should amount up to that much.
Absolutely right. Absolutely.
Okay, great. And sir, on the you had quite a good NPA recovery. I was just wondering how much of the NPA recovery you have booked under the interest income in Q2?
Interest income on account of the recoveries, no. We have been in a position to use it for, against the provisions which we have created. The additional provisioning which we have to make once we are adjusting a particular account, unless it is completely written off. In case it is written off, then it is added to the profit and loss account. And you will see one component which is on account of made of the written off accounts is forming the part of the other income. Yeah.
Okay, so nothing in the interest income portion.
Nothing.
Okay, and any income tax refunds in interest income portion?
No.
Okay, great. And lastly, sir, your OPEX seems to be on the slightly higher side at around the 20-21% year-on-year growth. So if you could just explain that, and going forward, what is the expectation on the OPEX?
If you see the OPEX increase of 23%, it is mainly contributed by the employees' cost increase on account of the provisions made for the gratuity, which is around 25 CR. Wage revision, we have started making the provisions, and up to this date, we have made a provision of roughly 40 CR. And other, the OPEX increases on account of the higher card processing transaction charges, increase of roughly 30 crores over the corresponding half year of the last fiscal. And then the security and the housekeeping charges. We have to upgrade our security apparatus in the J&K state, and MBNS was also a concern in some of the remote locations. So we have appointed a very professional agency regarding this upkeeping of our ATMs and business units, because the new generation private sector banks have started also coming in the J&K state, and we have to upgrade our MBNS to the level which matches well. So this was the one area, and security apparatus, that was the thing where we have to take care. And security charges are also an account of the minimum wages which we have to pay to the security guards, which is being revised from time to time by the various states, and we have to also revise the wages to the security guards accordingly. So there is also a principal waiver of roughly 5 CR. So in case you will see, though, all these things are temporary in nature, and going forward, once we are done with this reversal of the incomes which was on account of the restructured portfolio, both within the J&K state and the rest of the India, we are very comfortable to have a very comfortable OPEX and cost income ratio in the range of 50% as the guidance I have already communicated to you.
Okay, and the reversal, you're saying the impact of the reversal on NIMs is around the 30 bips, is it?
Yeah, it is around 30 bips. That's right. Absolutely right.
Okay, and what would that translate to in an absolute number, the 30 bips, approximately?
It will, in terms of the NIMs, it will be around 4.03%.
Okay, sure.
And, the yield on advances, in case you will factor that will be around 9.28%. And it will get the interest income on the loans and advances, that will be around 18% compared to 13% reflected in the investor update sent to you.
Okay, so I was when I said absolute number, what was it in crores of the reversal which you have done in Q2?
Reversal is 128 crores.
Okay, great.
For the half year.
Okay, and in terms of the market share movement in J&K state, how are you seeing in the last 1-2 years, sir, market share movement for our
Don't
bank?
worry on that particular point. You will get the pleasant surprise in the next 1.5 years. Our market share it is increasing day by day. It will be around 65% as on date, both on the deposit side as well as advance side. But the kind of, the plans which we have to expand more aggressively in the J&K state, it should not be an issue to take it to the next level very soon. And I would not like to give the guidance at this particular point of time, because we have certain plans in terms of consolidating our position in the J&K state and upgrading a couple of controlling offices so that, our zonal heads will get converted, will be now called the district heads. I would like that my district heads to coordinate the things more effectively with the district administration to ensure the kind of the growth opportunities which we have in each district in terms of business expansion and the branch expansion are capitalized properly by the J&K Bank. That is why we have created a separate vertical for the state government business in our hierarchy, so as to have the special focus on this particular segment, which was not there earlier, because the state government, both state government employees as well as the state government departments are the major, the clientele of the J&K Bank, and we need to have the focus in terms of their effective customer delivery, understanding their requirements, mapping it very properly, and I'm sure that thing has started happening and will be in a position to increase the market share very soon compared to 65. We would like to take to the next level.
Sure, great. Thanks a lot, sir, and all the best.
Thanks a lot. Thank you very much.
Thank you. Next question is from the line of Rajiv Agarwal from Dudarshi Advisors. Please go ahead.
Great. Thanks a lot for taking my question. So the first question I have is around the CET1 ratio, our equity tier 1 ratio, which is down to 8.7% this quarter. You mentioned that we don't see a need to raise equity capital this year, but given the growth rate, don't we get very close to the 8%, which is the minimum? Just some thoughts on that?
Yes, sure. If you see in the J&K state, when I am lending in the J&K state, it consumes the less capital. The kind of the guidance which I have given that to grow the loan book in the J&K state in the range of 25 to 30%, it consumes very less capital. And in the J&K state, the kind of the exposure which we are taking is mostly to top-rated corporates, which is also an advantage that the capital consumption in respect of those in those segments is very less compared to other sectors. Keeping both these aspects into consideration, and also the MetLife sale and the commitment from the state government, and also the flowing back of the profits which will happen at the end of this particular financial year, at the end of the March, we should be very comfortable in terms of the capital adequacy ratio for the current fiscal.
Got it. Great. That's actually very positive to hear.
And also, the impact of this, the capital of Tier 1 is also the downgrading of the ILFS, which is the impact on the capital adequacy ratio to the extent of 15 basis points, 15 bips.
Got it. Got it.
Thank you.
And are you still expecting the PNB MetLife sale to happen this financial year, right? So that could be a big boost to our capital as well, as you mentioned.
Sure. We are expecting that it should happen before 31st March, and it will not happen for the company as a whole, but maybe it may happen for the J&K Bank.
Got it. Got it. Now, the second question then is on the J&K restructured portfolio. And I think, again, as you have highlighted earlier in the call, that is doing really well. And that was one of our expectations. So that's fantastic. Now, can you talk a little bit about how much are the provisions that you have kept for that, and at what point can we start reversing the provisions you might have against the standard restructured portfolio?
The provisioning on account of these restructured assets has to be made in line with the RBI regulatory guidelines, and we have made the provisioning to the range of 8 to 10% on this particular portfolio, which is on the standard the assets, which is roughly around 200 crores, 200 CR. And that will get released post December 2019, when the moratorium period in respect of the restructured portfolio, this repayment period of 24 months will end as on December 2019.
Got it. And then lastly, I know we have had in the past a lot of issues with our corporate book in the rest of India, right? But our sense now is that now the corporates book is also improving, and there is a lot of good opportunities. But also, corporates who have taken in the past loans are also willing to return and be much more prompt with their loans. Are you seeing something similar on your side? How would you characterize your rest of India book at this stage?
No, in fact, the kind of the risk-bearing capacity which we have for timing in terms of the capital adequacy ratio, in terms of the requirements for the enhanced provisioning on the what do you call it, NPA portfolio. We are very selective so far the rest of the India portfolio is concerned, expanding the rest of India portfolio is concerned. And so far the existing portfolio is concerned, we would like to, rationalize it, review it properly. Because it is not only those accounts which may be doing well for time being with us, but those borrowers should also culturally gel well with the J&K Bank. So I could point a couple of the mismatches in our portfolio because, we are having a lot of expectations from the J&K state, both from the state government as well as from the people of the J&K state that, then we have to lend money both within the J&K state and outside. We have to be very careful because they feel they have an emotional equity with this in this particular bank. And the money which we deploy both within the J&K and the rest of India has to be deployed more judiciously. And that is the expectation from the state government also. So going forward, we would like to grow in the rest of the India. But keeping in view overall our, the risk profile, risk appetite, as well as, we will like to focus on the quality lending again for a couple of the years. Before we may change our strategy at a later date, but for time being, we would like to focus on the top-rated corporates in the rest of India.
Got it. I think you have, as you have pointed out, you have a lot of opportunity in J&K where you have an advantage. So why not take advantage of that? Makes perfect sense. Thanks a lot.
Thanks a lot.
Thank you. Next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. Now, so my first question revolves around your credit cost. Basically, you have mentioned in your opening remarks, we are looking at gross NPA sub 7%. And in your press release also, you have mentioned that provisioning pressure going forward should kind of taper off. So currently we are at about 170 crores run rate, which is about credit cost of maybe 1%, 1.1%. So is that going forward, is there anything that you can comment on your credit cost or provisioning requirement?
No, I am comfortable that it should remain in sub 1. The kind of the very aggressive provisioning which you have made last 2 years, that is making us very comfortable in maintaining the credit cost at a level of sub 1. And that was traditionally we were operating at a sub 1 level, and this was the kind of the temporary aberrations will be set right going forward. Both on account of the cost income ratio and the credit cost, which has gone enormously high, and but it is a temporary things. It will be set right in due course of time.
Okay. So sub 1% means a 150 to 170 kind of a range, right? On a quarterly basis. So does that hold true even if you have to provide for ILFS?
It will be not. It will be 0.5 to 0.9. Yeah.
So 0.9 is close to about 160-70 crores, right?
Yeah, that's right.
So does that hold true even considering this ILFS exposure that you have 1,400 crores roundabout, where you may have to provide 10-20% next 1 to 2 quarters?
20% should not be an issue. You can estimate it. I mean, it is not only the JK Bank, I'm sure. You know the level of the exposure with the other banks. So I am taking a very, the view which is contrary to what has not been taken by the industry players. But at the same time, yes, in case you expect a haircut of 10 to 20%,
right.
We have the sufficient cushion in terms of our floating provisions, which is roughly 350 crores. And we have started making the additional provisioning in respect of those particular accounts where we have the less provisioning requirements, but we would like to keep in cushion by having the enhanced provisioning levels in those accounts, which if required can be reversed and utilized against the ILFS.
Okay, so that effectively means that even if you have to provide for ILFS, we can still maintain credit cost of 0.9, sub 1%, right?
Yeah, absolutely right.
Okay, understood. And my second question revolves around your cost income. When you're saying cost to income of 58 to 60%, that is including other income, right?
That is, inclusive of the other income.
Other income, okay. And in 2 to 3 years, sub 50 level is what should be a fair number to kind of look at?
I am comfortable, but you will believe me only when I will be in a position to deliver it. As in case of, the restructured portfolio, I mentioned in my last call that if I will give you the assurance because kind of the negativity which is flowing from the J&K state, and my request to all analysts and our market players will be, don't get carried out by these rumors because there is a lot of negativity, from the J&K state which is flowing there. So in case there is any kind of the fear, I'm sure we have an investor relationship desk here. Please contact them at that particular point of time rather than relying on those kind of the rumors which are being floated with a different motive. So I'm sure that whatever concerns which you have from the side, keeping in view my relationship with the investor community for the last 2 decades, I will be the first to communicate you the concerns on account of any development relating to J&K Bank, rather than relying on the rumors which are coming from the informal channels in the market.
Okay, understood. Sure. And my third question is, basically, I'm sorry if I missed this number. What was the interest reversal in the second quarter that we have done? It is overall, it is 128 crores for the half year and 52 for the second quarter. Okay, 52 for the second quarter. And as you mentioned that going forward, the interest reversal amount is kind of very minimal, right?
Yeah, that's right.
Right. I understood.
There is net of recoveries, right? We are factoring also the recoveries, and the incremental will be 50 to 60 crores.
Yeah, incremental. And that would be amortized over how many quarters, like reversed over how many quarters? 2 to 3 quarters?
It will be 2 quarters.
2 quarters, right? So maybe 20-25 crores reversal that might come.
Maybe if we are comfortable, we can, entire take care of in the December quarter rather than,
Okay. Understood. Sure. So you also mentioned that 0.5% ROA that we are looking for FY19, right?
Yeah.
So that effectively means a bottom line of at least 500 crores, right? Considering a book size of 1 lakh.
50 to 500 crores should be the number which we are looking at.
But given the kind of run rate we are currently in, this is the asking rate for second half is quite high. So because we have done about 130-140 crores, right, in the first half. And
146, yeah.
And to achieve 500 crores in the if entire year we should have a run rate of 350 crores for the second half. That is quite a high asking rate. Do you are still kind of think that we can do that, basically, given the ILFS thing and plus this 50 crores provision reversal also will come in?
ILFS, I don't know. How the market is, definitely you are the best, you are the experts in this particular field to factor the ILFS in the whole thing. But, definitely if you will factor in the ILFS part, I'm sure that the kind of the numbers which we are talking of guidance is very much achievable. This is not something, which will be very difficult for us to achieve these numbers by the end of this quarter. But this is on the higher side, yes. But I'm sure that around 0.5 should be the guidance which we are comfortable to communicate to the market at this point of time.
So it's achievable, right, for us.
Thank you.
Okay. So that's it from my side. Thank you very much and all.
Thank you very much. Thank you.
Thank you. Next question is from the line of Amit Singh from B&K Securities. Please go ahead.
Thank you, sir. Thanks for taking my question. Sir, first question is, what has been the addition to the restructured book? And also, sir, what kind of assets are being added to this restructured book?
The restructured portfolio the concern was on account of the restructured portfolio in the rest of India, right? Almost the entire restructured portfolio in the rest has been already downgraded. So I am sure that the investor update which we have in case you will see our investor update, the additions which we have mentioned during the particular period. Now, I'm sure, Kamal, that there is not any concern as on date on account of the restructured of the portfolio. Concern was relating to the J&K state, which I have already communicated that we are very comfortable here. We are getting the recoveries. So rest of India, the entire portfolio has already been, almost all portfolio has been downgraded. So there are no concern on respect of the additions which have taken place. in respect of this restructured portfolio, the fresh.
Okay, sir, but what kind of loans are these? And are these basically JNK?
It is addition in the interest. Yeah, the number which is appearing there, this is addition on account of the interest. And the additional facilities which we have granted in these restructured accounts, existing accounts.
Okay. And sir, also in our movement of non-performing investment, we have shown a recovery of 100 crores. So sir, is this account basically HDIL?
It is Monet Ispat.
Okay, Monet Ispat.
But we have got the recovery on the HDL, yeah, on the credit side.
Okay, sir. Sir, how much is that amount?
It is around 235 crores, yeah.
Okay, sir. And sir, in the movement of provisions, we have provided somewhere close to 33 crores towards non-performing investments. So, sir, why have we done this?
We have to make the additional provisioning cash. And the money, when we have settled the money, so there was the, the additional, the cost which we have to entail for that on account of settlement.
Okay. And sir, our commercial real estate exposure, I think my estimate is somewhere close to 3,000 crores. So sir, can you throw some color on it? And sir, how much of it is NPA? And sir, how much of it is concentrated around Delhi NCR area?
I will give these details separately through the email, but I would like to point out that, the real estate in the context of the JNK Bank has not been the concern so far, because the kind of, the exposures which we have in relation to the real estate has now troubled us. But in case you need the details in terms of the geographies and in terms of the NPAs, I will send it separately to you through email.
Okay, sir. And sir, this last one. Sir, what is our risk-weighted assets for this quarter?
Risk-weighted assets, I can send you separately this number, yeah.
Okay, sir. Thank you, sir. That's it.
Thank you. Thanks a lot.
Thank you. Next question is from the line of Rakesh Kumar from Elara Capital. Please go ahead.
Yeah, thank you. So, just one question firstly on this, the retail loan growth in the J&K state. It was pretty strong this quarter. So, could we know, what are the developments there?
The J&K state economy overall, minus tourism, is doing very well. There is a lot of appetite for the retail loans. I will cite an example to articulate my point. When we introduced phone per loan facility to the police personnel here, at that time, the exposure which we had around 1,000 crores, in a span of 2 months, it has gone up to 2,000 crores. So that can give a broad sense that, the kind of the huge appetite which we are having for the credit in the J&K state is quite huge, and we need to streamline our systems, and that being the reason we are, investing now a lot on account of this IT side, to upgrade our IT infrastructure and bring new products and services which will facilitate the customers here to avail the credit facilities. I'm sure that you might have seen in the press that we are entering into the MOUs with all the major institutions here, including the state government. One is the state government employees, and also, the employees of the various institutions, where we are getting a lot of demand on account of the retail loans. And also, see, the J&K state, most of the things which we consume here come from the rest of the India. Trade segment is doing very well. And also, you see that, the huge investment flowing from the federal to the state government on account of the infrastructure building is creating a lot of ancillary demand for the credit, and that is generating a lot of the demand for the retail credit, like any project which is being set up, whether it is the railway link or the highways or the tunnels, the local contractors get a lot of business, and they need a lot of credit for their employees, and that is the one segment which is also doing well. And also, the what you call it.
Participants, please stay on the line. We are just trying to reconnect the management. Requesting all the participants to please stay on line. We are just trying to reconnect the management. you're connected back to the conference. You may please go ahead.
Hello.
So you may please go ahead.
Hello.
So you're
Hello.
just reconnected to the call. You may please go ahead.
Yeah, sorry. Line got disconnected. So what I was saying that so far the trade segment is concerned in the J&K state, it is also doing well. So demand is coming, from the state consumer consumption loans of the state from the state government employees and also from the business community. And also the kind of a demand on account of the ancillary credit relating to infrastructure projects. So overall, we are getting from every section of the society, we are getting the demand for the credit for the consumer consumption loans and the retail loans.
Thank you very much. Well, ladies and gentlemen, this seems to be the last question for today. I would now like to hand the conference over to the management for their closing comments.
And as I said earlier, that the kind of for the last 2 years, the kind of challenges which we had, I'm sure that the guidance which was given to the market from the time we have been in a position, register the numbers in line with the market expectations. But yes, going forward, we are very comfortable because most of the concerns which we had in the balance sheet, we have been in a position to largely address it. And I'm sure that going forward, the guidance which we have given to the market, we'll try our best to deliver the numbers in line with those expectations. But thank you very much for your support and for the trust, and we expect it to continue in the coming days as well. Thank you very much.